Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles. Today, I'm joined by the one and only Lady D. How's it going, Lady D?
Good. How you doing?
Good. All right, well, let's start the day. As always, I will jump into some TA, and then I'll hand it over to Lady D. All right, so we have been talking about the fact that the market is in balance for basically 2 weeks, right? We've been stuck inside this range. It's a balance area. It's a pinned market. It's an annoying, type of, landscape to trade in. And quite frankly, you could just go back this morning and rewatch my analysis from yesterday morning or the morning before. And my analysis this morning is exactly the same. We're still inside of balance. The market is still pinned. The behavior still looks like pinned behavior. The reason I say that this morning is because the market, had a spike up yesterday and we spent the entire overnight below the spike. So that's just another random weird thing that you wouldn't normally see. You generally only see that type of stuff when the market is pinned and is being artificially controlled. So as long as we are still pinned, we should assume we will remain pinned. And it is not until we officially break away that we can start to trust momentum one direction or another on a daily time frame. So today might be that day. It might be that we're just waiting for the FOMC minutes to come out, and then finally the market can start to make a move. It might be tomorrow. I forget what we have. I think PPI or something tomorrow, CPI tomorrow. So it may be one of those, right? It might just be that the market is waiting for that, and then it's ready to make its move. But until we see evidence that something has changed, we should assume the market will remain pinned. So what am I expecting this morning? A lot of chop, a lot of sideways, a lot of grind. Okay. I suspect we're going to stay pretty much inside yesterday's range until 2 p.m. We may poke above yesterday's high, but my guess would be if we do, we'll turn around and come right back in. That being said, if that doesn't happen, if what I think should happen doesn't, I'll be looking at the market very differently. So if we are able to get above 58.07, which is yesterday's high, and find support up there, I will get bullish to head up and test all-time highs. Okay. Do I think that's what's going to happen? No, I do not. But if I see that information, I'll change. I'll join the party very quickly. But in my mind, what is more likely is that we'll just spend the morning chopping around inside yesterday's range until 2 p.m. There are Fed speakers talking all throughout the morning and a few in the afternoon, but Powell himself is not speaking today. So that 2 p.m. news drop should be whatever sort of crazy volatility we're going to get, and then the market will start to do whatever it's going to do next. So again, it could go up, down, or sideways. We don't know. But at 2 o'clock, expect the tempo to pick up, expect the ranges to get extreme. Expect that to last about 10 minutes or so of extremely volatile, all over the place moves. Once that 10 minutes is up, if things start to pick a direction, whether it's up, down, or sideways, you can start to take those trades. So today could be the day we break away from the pin. It would make sense if it did. I said the same thing about Friday being the day that we break away from the pin, so I could be wrong here again. But yeah, that's where I'm at. As far as levels to watch this morning when the market first opens, the main first one is going to be the overnight high. It looks like we haven't quite made the overnight high yet. We still got a half an hour. So whatever is the overnight high and the overnight low, that is your sort of chop zone that you'll be watching the market chop around inside of. Support above the overnight high looks to test the previous day's high at 58.07. And like I said, I assume we're going to get a look above and fail and go nowhere. But if we get new buying, I'll get bullish up there. Pretty much the same thing for the NQ as the ES. The market is pinned. The behavior looks like a pinned market. So overnight range, yeah, exactly the same. Overnight range is the balance, the chop zone. If we can get above it, test previous day's high, monitor for continuation higher from there. That is it for me on the TA. What do you have for us today, Lady D?
Yeah, so the last couple of days have been really just very interesting in terms of TA, technical analysis, and the market profile. And I just wanted to talk about, since Monday, clues that might help people, kind of be patient, wait for that big move, what to look for, how to, if you're seeing a consolidation area, are there clues you can see in the market profile software that can tell you if it's going to break out to the downside or break out to the upside? And so I just wanted to, I have all these levels marked on my chart. Can you see the Epic Pen levels, Charles?
We can, yeah. There's a lot of arrows. Walk us through them.
Yeah, so I'm going to do that right now. All right, so on Monday, so I'm looking at this profile right here. What I found interesting about Monday was that we had this spike from Friday, right? And the spike on Monday, we opened here. I circled the green dot where we opened, and we went up and we tested the base of that spike, but we could not get into the spike. And that for me, once the market started consolidating, we had, again, this flag pattern. It took hours and hours. Remember, I heard you talking about this with Paul yesterday in terms of how you had to be very patient because the market just spent hours, consolidating in this range. Nobody kind of knew what was going to happen. It was very frustrating. But if you were able to be patient during that time and you did notice that it did not enter the spike, that's more of a bearish signal because the market wasn't even strong enough to get into that spike. It tested it and it was rejected. And so, all this time and volume was spent for hours and hours. And then when it finally made that break to the downside, you got this massive 20, 30 point move very, pretty quickly. So I just wanted to talk about that because I am a flag pattern trader. So when I draw these lines, these are kind of the patterns that I'm looking for. And I'm looking for breakouts of those patterns, since I trade the NQ mostly. Then here, okay, also, I want to talk about this balance area that Charles, you just talked about that we've been in for a long time. And again, I think Jim Dalton always says exactness kills. So this is just an approximate balance area high where I have the BA marked up here. The balance area low is below here. And, once we get to these balance area highs and balance area lows, the market tends to like to drive us crazy. I think we talked about that last week. It'll spend hours and hours just dancing on the balance area high. So like Charles said, today could be the day we're about to break out. But I just want to remind all of you traders out there that what's important is to wait for confirmation. Wait for the confirmation that you see buying, that you see time and volume before you get on that train. But if you see that, jump on that train because this is what we've been talking about the last few weeks is the importance in the market of excess and balance areas. And these are the kinds of things we have to be really aware of. Now, I want to talk about yesterday. So Monday, we had the big break to the downside, the spike down. But on yesterday, we opened in the spike, right? Which is neutral. However, what I really wanted to point out to you is that how quickly in the A period, we rejected out of the overnight range. We took out the overnight range. We single printed out of the previous day's range. These are incredibly bullish signs in the initial balance, which is the A and the B period, okay? When you see it single prints out of the overnight and then it single prints out of the previous day's range as quickly as it did. I mean, the B period didn't even re-enter that. It was just a straight line straight up. So because of that, obviously I was considering a trend day and I was being careful because I know we're dancing at the top of this balance area. However, the difference between what happened on Monday, where we had the big break to the downside, and what happened yesterday, which is a similar environment where we made this big move, and especially in the C period, for those of you that remember the C period, it was just like an instant short covering rally and it happened very fast. And then I think, Charles, you were absolutely right about this. I think the move is done for the day. And so what did it do? It just balanced again for, from 11 to, I think it was about 1:30 when it started. We had this area right here today is the afternoon pullback from yesterday. This is an important level to watch, that we stay above this level for the market to continue to be bullish. However, the difference between yesterday and the previous day where we broke to the downside from this flag pattern is, we've talked about this, the importance of buying tails, the importance of single prints. This is a lot of momentum and buying to the upside. So, this is the base of the flag right here. And I think it's around 70 to 75% chance that if the base of the flag is bullish, the breakout will also be bullish, which it was. If you were patient enough to wait for it, the trade of the day was catching this move once it broke out of this consolidation flag pattern. So for today, And so here, just all of this writing, which I'm sorry, it's very messy and sloppy, but I just wanted you to see the obviousness of this single printing out of the overnight, single printing out of yesterday. So this ONR means overnight range. We single printed out of the overnight range, and we single printed out of yesterday's range. So these are very bullish signs. So while I'm watching and waiting and trying to be patient, the market's driving me crazy from 11 to 2. I know that when that move comes, it's most likely going to be the trade I want for the day. And that's exactly what happened. So today, what I'm looking at, seeing as we're dancing on the kind of the top of this balance area and the overnight range, as of this moment, we would be opening in this spike. So that would be considered, neutral to bullish. What I would consider waiting for today is a retest of this consolidation area, because now this should be support. As you can see on my volume profile on the right, there is a large volume node right here. So that would be the retest of that support, which could give you the momentum up for the breakout to the upside. But I agree with Charles 100% today. The big news of the day is the FOMC speaking at it's 2 o'clock Central Time, 1 o'clock Eastern Time. This is probably, the market's probably not going to go, too far today until that time. But I hope that's helpful for some of you, just to go over the last 2 days. Monday we had the downside breakout. Yesterday we had the consolidation with the upside breakout. So I'm just showing you things that by using the market profile, I can put all these data points together to make an assessment of what the higher probability is going to happen for the day and how I can make my money by being patient and really waiting for those opportunities and not getting stuck trying to take trades in the middle of a consolidation area, or trying to take trades, where the market just isn't going nowhere for hours, because you're just going to get chewed up just like chop in the first hour of the day. Charles, what are your thoughts about all of that?
I agree with everything you said.
Yeah.
I have nothing to poke at in that. No, I agree with everything you said. I would just, the only caveat that I would add is, in these sort of pinned markets, a lot of times the traditional TA things don't play out the way you want. So you always got to be extra patient and extra confident. But yeah, all of those.
Yeah. And I wanted to talk to you about risk, because on FOMC days, especially for some of the traders that may be listening to us that have smaller account sizes with smaller accounts, if you make a bad decision at the beginning of the FOMC announcement and the market makes a 20, 30 point move, it can blow up your account very quickly. So I wanted to ask you, how do you manage risk on these FOMC days, or give any advice for, some of our clients that have smaller accounts that can't be trading with huge stops or.
Yeah. So my advice is, don't trade the FOMC.
Yeah.
And that, you're laughing, but I'm serious.
No, I know.
There
That's
is
why I'm
no
laughing.
better advice. If you haven't practiced, if you haven't, sat through a bunch of FOMC meetings, and I'm talking about like a year's worth at least of FOMC meetings, and you really understand how it works, you should just take the afternoon off. You just should not be trying to take trades. At least
That is
I
the
would say,
best advice ever. Seriously.
yeah, I would say at least between 1:50 p.m. and 2:30 p.m. At least during that window, because it's very hard if you don't have experience to not take trades.
Yeah.
When you start to see the market making 50-point moves in 5 seconds, it's like you just are so desperate. You're like, oh my God, I could have made so much money. You'll have this instinct, this feeling I think I should go long. And then boom, the market will go 50 points up and you'll be like, I fucking should have done it. But you have to understand, there is no edge. There is no guarantee. It is totally crazy and random and volatile. So for me personally, after years and years of experimenting in a paper account and trying to figure out how to trade FOMCs, I never found a way to do it where you can manage your risk. I never found one. The only thing that I found that works is just get long or short, pray to the money gods that it'll work. And then if it's not, get out of it as soon as you can. You know what I mean? Just market exit. Because any time I've tried to figure out a place to put a stop, I get stopped out and I lose. It's like you put your stop anywhere, they're guaranteed to take it out. So it really is just a gamble, plain and simple.
Sorry, I laughed so hard hearing you say that, just because when I first started trading, years ago, it was it was just shocking to me how, like you said, the market will take off to the upside and you think, oh shit, I got to get in. And then you get in and then it drops 30 points just as quickly, and it's just like so insane. And like you said, with the stops, usually there's one big move in one direction, seconds before it comes out to take out everyone's stops on the low side. And then it goes out and takes everyone's stops like within a massive range. And then it makes the move. So you've gotten stopped out and then you're like, what just happened? Yep. So it is very difficult. And I agree. I think for newer traders, sit out the FOMC days and watch, or just sit there with a paper account and test some scalps. You can scalp pretty easily,
Yeah. Just play with it as an educational thing. Don't risk your real money.
Yeah.
But it's like, you know what the truth is, D? No one's listening to us. You know it, and I know it. Everyone, there's 53 people here right now, and all 53 are thinking, yeah, I'm going to trade it anyway.
Oh, I know. And they will continue to do that until they wipe out their entire account in
they'll
less
do it
than
until
5 minutes.
One bad day. They just get their face ripped off.
Yeah.
And then they'll learn from it and never do it again.
It's so true. Like, I love that we have these conversations because like it's one of those crazy things. Everyone, I read an article about some trader who only trades FOMC days. Mm-hmm. Like this guy, that's all he does. And he studies every economic indicator and he makes a decision before what way he thinks the market's going to go. And he just goes for it like 100%. And he can make his entire account in just those, few days a year where we have those FOMC announcements. But anyway, I don't suggest that for anyone who doesn't.
Trading desks that just do this, that just do big events.
But they have, billions of dollars of capital, so that doesn't work for retail traders like us.
And they have computers that can enter the trades for them.
Yeah,
it's like it's all pre-programmed. So the computers know exactly what to look for and how to enter those trades, and they can do it in a fraction of a second. But if you are a human being just watching the market go up and you're like, let me just hit the market buy button, good luck, my friend. I mean, I'm not saying I don't do it. I do it. Okay. I do it. But I'm just saying good luck to me as well.
Yeah, totally. It's a total crapshoot. All right. So I did take some pictures and snag it because I know last week when we met, we talked a little bit about like the pre-market and maybe looking at some signs in the pre-market of where the direction might go for the day. And then I took some pictures of some of my flag pattern breakouts. I think I have a good shot of this one that happened on Monday. If anyone's interested in seeing it, I can pull those up. But otherwise,
sure. So this just while you're pulling it up for the audience to know. So she was talking about how she likes to watch the market an hour before it opens just to get a feel for what might happen that day, what levels might be important.
Yeah. So this was a picture of Monday. So just so you can see what it looks like in terms of candlesticks, because I don't know, I'm assuming a lot of people that are listening don't all have market profile software. So if you're looking at a candlestick chart, my indicator here that you see is the Ichimoku cloud. I scalp a lot of trades from the levels from the cloud, but this was that consolidation, and boom, look at that breakout. That was the one trade of the day. We also talked about that I think every day there's like one really good trade, and if you're patient and you wait for that good trade, you can really benefit your trading account from being patient and waiting for the right opportunity. So that was that breakout for Monday. This, I believe, okay, so this was my pre-market. We talked about this last week for those of you that were listening about how I kind of just like watch the pre-market activity to see if, sometimes I think the bigger players are accumulating positions because they have a good sense of what's going to happen for the day. So you can see from 5 a.m. to about 8 a.m., we had this group of candlesticks here where the market was just staying at this level, not really doing much. We have wicks on both sides of the candles, so there's not really a good direction. But look what happened when the market opened. I mean, boom, this thing took off to the upside. And if you were short, you were going to get your face ripped off, which is just another advice about waiting for the initial balance, wait for the C period to choose the direction for the day so you don't get caught up in that. So I do really like to watch the pre-market from 7 to 8:30. I'm not taking trades necessarily. I'm just observing what's happening.
So when you're watching the market consolidate, is there some sort of thing that's telling you it might break higher when the market opens?
Sometimes I also have volume. I look at the volume that's happening, during this period. And sometimes you can see there's a big volume spike somewhere in here. And I will generally just notice if that volume spike happens on a green candle or red candle, and that could be an indicator. Now, this is just like me doing my research. I'm still testing some strategies based on this that I don't have the statistics to yet, but when I have them, I will share them with you.
Mm-hmm.
But this is the kind of opening drive, they call it, I think, at the pre-market, that if you're trading in chop, like we talked about so many times, this is another thing like FOMC, which can like rip your account in half if you're not careful. So I just wanted to point that out, since we did talk about that last week. If that helps anybody, it's just something to start noticing, pay attention, because my conspiracy theory is that the bigger players kind of have an idea of where they think the market's going to go for the day. So they're consolidating these positions to the long side and taking advantage of that massive move that happens at the opening. I mean, this is just total speculation, but this is what I love about being a trader, is I can analyze and research and come up with my own ideas. And that's what I love about it. I have to test it, but
yeah. And a lot of times things really are instinctual. Like sometimes that's one of the things, the hardest things for me as a teacher is like, people will ask me like, how did you know that was going to, like, I'll make a guess ahead of time. Like yesterday when the market made that massive move to the previous, for the ES, it was just to the previous day's high. It made that massive move to the previous day's high in like 5 seconds. And I just knew, like, that's it. Like, we're going to go sideways now for hours. That's probably all we get. And it's like, then people will email me and be like, hey man, how did you know we were going to go sideways for hours? It's like, it's not like a specific thing. I just know, like, I just watch it every day and I just know, Well,
I do have a question about that, because that move happened so fast in the C period. It just was so quick. And I'm assuming that was a lot of short covering rather than new money buying. However, how did you know that, because in my mind, I was thinking, oh, this is a trend day. I mean, it's so many single prints. We had 2 levels of single prints. How did you
The answer is very simple, D. The answer is, I knew it was going to be bot shenanigans, right? So this is
because we're at the top of a balance area?
What's that?
Why did you know that? Because we were near the top of a balance area?
Well, yeah, because at the beginning of the day yesterday, I explained why. It was like, because all the signals that the market has pinned were still there before the market even opened yesterday. It was the way the market had made its move the previous day. It was where we were opening yesterday, and it was the icebergs. There was literally like, before market open, there was like 6 red icebergs at the exact same level above the market.
That's right. I remember you saying that yesterday.
So I was like, I know what the market's going to do today. I was like, I don't know if it's going to go up or down, but I know whatever it does, it's going to stay stuck in one place for a long period of time. Then it's going to make an instant break, and I don't know if it's going to break up or down, but it's going to make an instant break, a huge move in like 5 seconds, and then it's going to go nowhere for the rest of the day. I just knew it. And so when we sat there and we watched that slow melt up and then that instant pop, the second I saw that pop, I was like, these are the bots. And now they've just convinced every trader on earth to go long, and we're at what will probably be the high of the day. Like, I just knew it.
Man, that was 100%, intuition on your part. That's great.
Yeah.
And I think intuition does play a big part in being a successful and profitable, consistently profitable trader.
100%. Yeah. And
it really does.
It's the one thing you can't teach. You can't teach people instincts. It's like, I always use the analogy, like if Michael Jordan were to run a basketball camp and teach people how to play basketball, they wouldn't be as good as Michael Jordan. You know what I mean? It's like instincts is something you get from practice. It's something you get from experience. It's something you get from pushing yourself to be better and better every day. It's not something that can be taught.
Yeah, that's so true. Well, that's great advice, Charles.
All right. Well, thank you, Lady D. Another good session.
Yeah, it was fun. Thanks.
All right.
All right. Happy trading, everyone.
Have a happy FOMC at 2 p.m. Remember, it's just the minutes today. So 10 minutes after 2 p.m., whatever chaos happened should be over, and you can look for reliable trades after that.
Awesome.
Thanks, Dee.
All right. Good luck, my friends. Bye.